Hi everyone, Kathleen Brooks here, Research Director at XTB in London. This is a busy week for financial markets. There are some key earnings releases from Amazon and Apple, which could give us a good steer on whether the AI boom will continue to power markets this week. We also have a spate of European earnings, which are driving markets. A key outperformer this week has been Tesla. Its share price rose by more than 15% on Monday after it announced a tie-up with Chinese tech giant Baidu that will allow it to sell its full driverless tech in the world's second largest economy. Tesla shares are in recovery mode, and on a normalized basis, Apple is lagging the EV maker compared to the rest of the Magnificent Seven. We'll have to see if Apple's earnings on Thursday continue this trend. Now, the Fed meeting also looms large over the financial markets this week, especially in the FX market. On Monday, the dollar-yen exchange rate surged to 160 before falling back sharply. The yen has been one of the weakest currencies in the world this year and is down more than 10% versus the US dollar. However, Monday's volatility in dollar-yen suggests that the Japanese authorities may have intervened directly in the market to stem the yen's decline. This is significant as intervention tends to trigger FX market volatility. Japan also has a massive war chest of FX reserves with more than $1 trillion of reserves. Whether or not the yen weakened substantially from here could depend on the outcome of Wednesday night's Fed meeting. If the Fed sounds hawkish or concerned about inflation after a recent run of higher than expected inflation prints, then we could see the dollar surge once more and further yen weakness. There's also a chance that the Fed could open the door to further rate hikes rather than cuts due to the strength of the US economy. However, while we think this is a low probability event, if it happens, then it could send the dollar soaring and it may sour risk sentiment. That's all for now. Thanks for joining.